Welcome to the Financial Times in New York. I'm with Tom Braithwaite, the US banking editor. Tom, we've finally finished a week of banking results. What were the highlights?
After the grueling week of bank results, the highlights, I suppose, were Morgan Stanley, which outperformed a fairly miserable post-crisis track record with pretty strong results, really closed the gap on Goldman Sachs and JP Morgan Chase.
And the lowlight?
The lowlight, I think, for everyone was fixed income trading, which has been weak for some time, but the first quarter is traditionally the strongest period of the year, and yet this is the weakest quarter for many since 2008, 2005, several years for the biggest banks.
And was there someone who defied the trend?
Well, Morgan Stanley was up on fixed income trading. It's a smaller business for them than it is at JP Morgan or Goldman, so perhaps less significant. JP Morgan was perhaps the worst, with a 21% decline year on year.
And we had a lot of complaining leading up to the results about capital ratios. Did you see any evidence that any of them were hurt by that?
Yeah, I think they feel the pain in fixed income because they have to hold more capital now against some of the products, particularly commodities perhaps, than they used to. And you also see it in the bottom line, return on equity, which was again pretty weak across the street. Even the best player, Goldman, only got 10.9% ROE, and in the good old days it would happily make 20, 30, 40% ROE.
So the banks aren't the milk cows they once were?
Not yet. I think investors are still hoping that once they chew through all the regulation, they're going to still be making good money, and there's been a lot more interest in the sector over the last 12 months. People still seem to be betting that there's jam tomorrow from these banks.
And the mood of the executives across the board, say from last 6 months?
Yeah, I think Jamie Dimon sounds slightly more morose than he did, even though he was asked on a media call whether he was still having fun, and he had to pretend that he was. Ruth Porat at Morgan Stanley sounds pretty happy, as does her boss James Gorman. And at Goldman, I think defiance is perhaps the mood. They had a record quarter in investment banking, but another poor quarter in fixed income trading. So as the sort of acknowledged leaders of this sector, they're not looking massively hot.
Thank you, Tom. And we'll have to watch for the next round of European bank earnings.